Morning, everybody. Welcome back. You know, for the past few weeks, we've been talking about different options for homeowners dealing with mortgages. And there's some really interesting stuff out there. As a matter of fact, mortgage rates are at historic all-time lows. And when you decide to get a mortgage, there are still some things to know. Whether you're buying for the first time or if you're refinancing with the drop in rates, you have options to weigh. Do I go with a fixed rate or a variable? What's the difference? And what is good for me? Now, Brent Parnell is back with us on BT to clear this up. I've been a homeowner for 20 years, and I still get confused. Fairly common?
Yeah, you know, even more so today with fixed rates rising a week or two ago and variable rates holding strong, consumers are not sure exactly what to do.
Funny you should bring that up, because we went and hit the streets, Brent, to ask some folks if they knew what fixed-term mortgage was, and here's what they had to say.
Fixed-term mortgage, I believe, is where the interest rate is fixed for the term of the mortgage. It doesn't change.
Fixed mortgage should be a rate that's set that you're locked into.
It's when you decide on like one interest rate for a set period, like maybe 5 years, something like that, and no matter what happens in the markets, that's the rate you're going to be paying.
Well, did any of them hit the nail on the head, Brent?
Yeah, you know what, they're right there. I mean, a fixed term, the basic points behind the fixed term is that the lender is going to guarantee you an interest rate and a payment for the duration of the term. The benefit of that is it's pretty easy to budget for.
Right.
And today, fixed rates are at historic lows. So for your average first-time buyer or somebody on a fixed income, fixed mortgage terms make a lot of sense.
What is it at right about now?
5-year fixed rate today is just over 4%.
Wow.
Yeah, one lender in Canada right now just under 4%, but it's got to be done in a week or two, so there's a bit of a catch. Yeah.
So no matter what happens to the interest rates after that, it'll stay there.
Exactly. And historically, I mean, the average 5 years should probably be more like around 5 or 6%. So we're at really low rates right now. Definitely a good time to look at that fixed option.
So is this the time to do it? I mean, are there risks to going into a fixed rate?
Well, I would say the biggest risk is losing out on the short-term gain from a variable rate, which we may talk about in a few minutes.
We'll get to in a second, yes.
Right.
Add some more confusion into the quagmire.
Exactly.
But so we asked people, thank glad you brought that up, if they knew what a variable mortgage rate is. Let's see what they had to say.
It means that it's going to fluctuate with the market. I'm pretty sure that's what they base it on. Like, so if it goes up, you're going to be paying, or if like the interest rates in the market are higher, you're going to be paying a higher rate on your mortgage.
Variable varies with the day-to-day, I would think. I think it's day-to-day or else month-to-month. It's based, I think, on the stock market. I'm not sure. On the bank rate, that's what it's based on.
And a variable rate is where the rate fluctuates based on prime.
There you go. How'd they do?
Yeah, the last guy hit the nail on the head. It fluctuates with the Bank of Canada prime, whereas fixed rates are more closely tied to the bond rates.
Right.
Variable rates are going to be tied to whatever the Bank of Canada has set the prime borrowing rate at, which is currently at 0.25%. So it's almost at zero right now, making variable rates very attractive, somewhere in the neighborhood of around 2.25% or slightly under today.
Is it what's happening in a worldwide market that eventually affects this?
Yeah, see what happened about a year ago when I guess the whole financial crisis hit. Variable rates, the Bank of Canada prime was a fair bit higher. Variable rates were actually a better discount but higher priced. And when I guess liquidity in the credit markets dried up, the banks decided to pump a bunch of credit into the market, lowering interest rates. Bank of Canada dropped prime to about 1/4 point, and that's why we're seeing such low variable rates today.
All right, and I know you're not a fortune teller, but
right.
What do you see?
Well, I mean, even as recent as last week, the Bank of Canada committed to keeping the prime interest rate low until June of 2010.
Ooh.
And a lot of it has to do with the fact our dollar is doing so good, it's keeping inflation down. So basically, the bank's able to keep those interest rates low for the short term. The real question is a year, 2 years, 3 years out, what's going to happen? And I think it's not a matter of if rates are going to raise. When are they going to raise those rates? And as a consumer, what can you do in that situation?
Real quick, how do you know what is right for you, your situation?
What we normally do with a lot of our clients is sit down, have the conversation with them based on their own personal situation. So a variable might be great for somebody who is maybe going on their second term, second or third house, has a little bit of equity, maybe isn't too tight in terms of debt to mortgage payments, and has a little bit of flexibility so that if those rates do rise, they can afford those new payments. Whereas your average first-time home buyer, somebody on a fixed income, bills are a little bit tighter, they should probably look more at a fixed term. And I think there's no real winner today. I mean, variable provides some short-term gains. There's some risk and reward in there. Fixed term provides some security in the long term. Either way, I think as long as it's right for that consumer's situation, they're going to win out today.
All right. Well, listen, it does sound confusing. Thanks for clearing it up, though. And if people have more questions, where can they find you?
Visit the website, www.virtuity.ca, or give us a call at 888-4663, 888-HOME.
All right.
Yeah.
And all that information will be on breakfasttelevision.ca as well.
Exactly.
We'll see you again real soon.
Thanks, John. You bet.
All right. We'll be back with more right after this. Don't you move.